Welcome back to The Explainer. Today, we are digging into a highly focused, highly anticipated source material all about financial independence. If you love dissecting ideas and, just getting right to the core of complex topics, you are in exactly the right place. We aren't just looking at vague theories today, no way. We're unpacking a specific architectural framework for the near future. This source lays out exactly how emerging technologies, automated digital businesses, and shifting market dynamics are converging to create some literally unprecedented wealth-building opportunities. So let's get right into the mechanics of how this actually works. Okay, let's dive into this and look at the core directive this text sets out to answer. How do you build passive income in 2026? The source frames this as an immediate, highly practical challenge. It's a how-to that is demanding an actionable response from us. And honestly, the underlying thesis is fascinating. 2026 isn't just another year on the calendar. It marks a critical tipping point where artificial intelligence and decentralized finance completely change the mechanics of generating income. Those old rules of just trading your time for money, yeah, they are expiring. A totally new methodology is absolutely required to navigate that shift. Notice how the text intentionally uses the word blueprint. This isn't just a collection of vague theories, a guess, or a wish list. It's a structural promise. Think about it. When an architect hands you a blueprint, they give you a tested, step-by-step schematic, right? The author establishes absolute authority here by outlining exact structural elements, things like configuring automated dividend reinvestment loops and setting up low-maintenance digital asset portfolios. It strongly implies that if you follow the specific, tactical lines drawn in the text, the resulting financial structure is highly predictable. Now, what's really interesting about this is isolating these two words, passive wealth. That's the ultimate destination here. But think about the inherent friction between those two words for a second. Wealth usually implies intense labor, active management, continuous effort. It's a grind. Yet this text focuses purely on wealth that once established, generates itself without constant daily human intervention. It's a state of being where your assets, whether they're algorithmic trading bots, index funds, or highly scalable software as a service microbusinesses, they do the heavy lifting, not you. It completely shifts how we're supposed to view the allocation of our time and our resources. Let's move to and see how this builds into a brilliant paradox at the heart of the text. On one hand, you have the ultimate goal, passive wealth, a state of rest and automated returns. But that is contrasted entirely by the action required to get there, which is building. You just cannot achieve that passive state without an intensely active construction phase up front. The text openly acknowledges that before you can sit back and let the wealth be passive, you have to actively architect these systems. It highlights this really stark contrast between the quiet, automated destination we all want and the noisy, highly focused effort required right now. So the crucial point is the active construction aspect, and this is where the text gets incredibly practical. The mandate here is to actively build. We aren't talking about metaphorical bricks and gears here. The text lays out the exact steps to build self-sustaining ecosystems. This means things like coding or licensing automated software, establishing optimized dividend portfolios, and leveraging AI tools to handle customer service and logistics for digital platforms. The focus is entirely on the tools, the digital materials, and that upfront labor required to construct income streams that will eventually run themselves. And this brilliantly illustrates that the target for this construction phase isn't some distant, unimaginable someday. The target is 2026. The source uses this specific date to create a dramatic sense of urgency because it identifies a rapidly closing window. We are currently right in the middle of a massive technological adoption curve, specifically with generative AI and automated market algorithms. By 2026, the text argues, these tools are going to be universally adopted. And what does that mean? It means the competitive advantage of setting them up right now will be gone. The timeline is precise simply because the opportunity is fleeting. This 2026 horizon is really the anchor of the entire text. The strategies detailed in the blueprint are uniquely tied to economic drivers peaking in that exact year. The text points to a crazy convergence. Mainstream blockchain integration, significantly lowered barriers for AI-driven software development, and massive shifts in global remote labor. Literally, if the year were different, the entire blueprint would fall apart. The underlying message is that these specific technological drivers are creating a perfect storm, and 2026 is the exact moment your active building phase needs to be completely finished so those passive returns can take over. As this 2026 horizon rapidly approaches, the framework for transitioning from active building to passive income is laid totally bare. We've seen how the text maps out the shift from intense upfront asset creation, like those automated digital businesses and optimized portfolios we talked about, into a state of true financial automation. The mechanics of the near future are already in motion, and the blueprint is sitting right in front of us. So the only question remaining is, will you follow the blueprint for 2026? Thank you so much for joining me on this deep dive today, and I really hope this explainer has given you the actionable insights you need to start architecting your own future.